My whole market S&P video, I guess, never published. I did it twice through TradingView and it just crashes and forget it. Forget publishing through TradingView. This is the thing, the real one. We're gonna talk about the S&P crash, up or down. This is a crazy market position. I'll cover some momentum. We'll do the long charts, the tight charts. We'll look at some indicators, all the stuff. This is Brian Lewis with MMT Investing, and things just changed. Okay, so I guess just a zoomed out look at the huge thing. I mean, this is from 2018. This is the Volmageddon crash that put us in this wild volatility zone. And so we've broken, well, across the moving average easily, bumped the head on the top of the volatility zone, broke through, and now we have pre-market activity. We've already come down and checked the top of the volatility zone today in off-market hours. And you can see down here the momentum is above the zero line still. It's expanding to the downside. So this is on the daily candles. So this is like a couple week outlook is not yet bearish, but it's aggressively downward. So this is kind of obvious and not too helpful, I suppose, because if it turns around above the zero line or just barely under it, then that's a bullish bounce. It really has to drive down. It has to drive down below the zero line and stay below the zero line to become bearish, kind of, short-term momentum, kind of short to medium term. And then long term, we're still up here bullish. And we're above the moving averages. So yeah, this target, we just checked the top of it. We'll probably see in pre-market trading if we're going to break underneath it or not. And then we have the moving average and the top of these things just here. There's another huge support zone just underneath here. And we'll probably find out about every bit of that pre-market and Monday trading. Let's go into the hourlies. So roughly the same kind of thing in the hourlies. You can see that we're in this bullish channel just bouncing forever and broke down, back tested the channel, and now we've checked the top of this volatility zone. And so that's where we are. And the immediate short-term momentum here is already gone bearish and is staying bearish. This is a bearish reversal. And you can see that it doesn't happen very often that you get a bearish reversal. Like usually the bearish moves go right back up to the bull side. We haven't, well, I mean, this is a big bull run here, so wouldn't expect a bearish a bearish momentum reading during any part of the bull run there. But if we go back and look at these parts where it pulled down, you can see where it pulls down and gets to the bear side and stays on the bear side is where you get these pullbacks. Like here, we get to the bear side and then stay on the bear side, and you get a kind of a good pullback. Here's another kind of bearish spot where you go bearish and then stay down. Just for a look at the momentum, kind of how to read it and where we are is we have gone bearish and stayed bearish. So that tells me that I expect this thing, and it's diverging on the bearish side. So that makes me expect more of a down move, and then it would probably not stop and reverse the down move until you get back to around the zero line. So right now we are short-term bearish for the next day or two on momentum with a bearish, we stayed bearish and we're heading down also. So that's definitely bearish momentum for the next day or two. The couple week momentum is unclear, and the long-term momentum is still bullish. So that's what's up on the momentum. And let's, I guess, mention the GameStop squeeze. So the idea of why we may be getting a pullback here right now is because the GameStop squeeze is causing big funds to have to liquidate their long positions to cover the short squeeze. And so you might get a pullback out of some kind of things that they're holding. I did some videos on silver, which is actually a big long position that they're holding. And so um, that makes there's like the silver squeeze idea that silver might explode soon. But if they're liquidating long positions, silver could very easily go the other direction if they're liquidating their longs. So I just did a video that says like silver might push up from some hype and it might actually dive like a pump and dump because they're liquidating their longs. So if the squeeze continues, which it looks like it is, then this sell-off could be related to that. And so like on the like on the NASDAQ, on the things we've broken down, like the whole NASDAQ is kind of broken down and potentially back tested. That's a really tiny back test. That's not like a big, like confirmed kind of back test, but it has kind of back test and stayed down. So that's a bearish look. On the Dixie, that's way zoomed in on the dollar, but we've come down to a bottom and we've had an upward movement in the dollar during this down move. It kind of preceded the down move a little bit, and it's squeezing here. So the direction of this squeeze could relate to the next, week or two in the market. If the dollar goes strong, the market usually goes weak. But we haven't broken out of here yet for any kind of a signal from the dollar. It's just that the stronger dollar has correlated with the weaker market so far, but hasn't been particularly helpful as an indicator. Bitcoin did this kind of flag, this pennant, bullish pennant breakout thing, and it is not holding. It's breaking back in. So this, I was making videos that this looks like it's holding and should probably go on another bullish run. And that right there does not look good for this chart. And so that's pretty much unrelated to everything else that's happening because Bitcoin did sell off during the big 2020 liquidation sell-off. Bitcoin did sell off with it. But this sell-off doesn't look anything like that one. That was like a broad market sell-off. This looks like a small sell-off relative to what those hedge funds are holding long, which is probably the FANG stocks and maybe some small caps. And so this is roughly the same chart as the NASDAQ. And that's just the ETF that kind of tracks the NASDAQ. The IWMs have been, this is the small caps, have been like aggressively bullish in a weird way where, everything in the news has just been saying like small businesses are in so much trouble, blah, 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 blah. And then the small business ETF just like has been going up like way more than it ever has. Let me zoom out and look at it. So not financial advice, anything I say ever, of course, but just whatever you hear in the news, like if you do the opposite, it tends to be a good move. Like look at this thing. This is the small businesses that are supposed to be like going out of business and whatever, and they're just like like it's even a more aggressive chart than the than like the FANG stocks and the NASDAQ right now. That's just like vertical, which is ridiculous. And it has turned over. It hasn't exactly broken down yet. I'll throw another trend line in here. But it looks like it's still holding up. The IWMs, which stands for Russell 2000 small cap stocks. I don't know why they chose that ticker. This was long before the days of tickers that were fun and sounded like what they are. Anyway, I think this one's entertaining and not helpful in any way, but just the whole idea. This is the big 2020 crash here. And it's just like, oh, small businesses are in so much trouble. And this thing has just been ripping and even like went on a higher freaking parabolic takeoff. It looks almost like Tesla or something. So It hasn't broken down yet, but it's just kind of ridiculous. Financials are broken down. It looks pretty bearish. So usually financials kind of indicate the broader market a little bit. So a little bearish on the financials, maybe bearish, not a big deal. Gold just kind of pulling back a little bit. And then I have a trend line here, which would, I mean, gold looks bullish. It came back and checked here, so we get maybe a trend line, not a really good one probably, but it seems to be above the trend line a little bit, and if it finds support or something, maybe gold could be okay. But it's been following the market reasonably well. So I don't know. I don't think gold's super helpful indicator, and the spot where it is now, under the moving average here, just for gold itself, maybe looks a little bearish, but probably support if it gets down here. And then silver, the crazy one. So this is the hype, all the crazy stuff, and this is the actual silver contracts, not the SLV, but it's the same shape basically. But silver has a pretty good bull market support line now. It's got support of a couple of hits here, and it's blasting off to the upside right now. So I think that's the thing to expect for today and tomorrow, is just like all this insane news on silver freaking taking off and all that. But if silver explodes up into a market sell off, I don't trust that very much. It's already a little bit up away from the trend line now. It already doesn't look like a very good entry on a trade setup. If it's sort of well, I guess it depends on the length of the trade. Not financial advice, but like on a short, like a day trading thing, it could be fun because it's this parabolic takeoff. But kind of on the weekly, it's a weak spot to try to get in. If it pops up any higher, especially, it's a really weak spot to try to get in because it's probably going to get kind of crazy, and then it's away from its support. And then longer term, like out a couple of months, maybe 3 or 4 months, like this support line still looks pretty good. So I mean, it would probably pop up, and it would probably kind of do like a little pennant thing over to support again, and then it'd go up again, something like that, as the generic thing that I would probably do on the support, unless something weird happens. But definitely think something weird can happen with silver right now, because just the insane news, and then all the news is saying it's going to be a silver short squeeze, but like everyone in the Wall Street Bets channel is saying the opposite. They're like deleting those silver squeeze posts as spam. They're saying those are posted by whoever, corporate or hedge fund people, bots. Like, that's not our group doing that, and there's no silver squeeze. The only squeeze is GameStop, and it's still on. So I mean, it could be fake hype on silver, and then that's a long position for the hedge funds that could sell off. So silver precarious and not indicating anything else in the market at the moment. And then AG is the silver miner, like the main one. First Majestic is one of the biggest silver miners, and it's one of the silver miners with the most short interest. Oh, that line is not part of the is not part of the chart. I was just kind of throwing a trend line on the angle of this takeoff, and that's the angle of the takeoff that it's on right now. Like, if this here, let me go in on so this stock could be crazy. I just really don't like. Yeah, I just don't trust the news story that's out right now. But if you zoom way in on it and kind of squeeze it a little bit, it doesn't look as crazy. I mean, it just went from 13 to 20. I mean, we've seen a lot crazier moves than that. But usually when you get a big news blast that affects a takeoff, one of two things happens. Like you get a big parabolic move up and it just kind of falls out. Usually it'll fall down to a level slightly above where it started, but it's just like one parabolic move and it rips down. Or you find some support and then you go up to a second level and then that falls out. And that is actually what I think is going to happen with silver. I bet it finds support. It looks like it has already. And then you get the parabolic move that falls through. But if it holds support a second time, then that could be a much longer bull line trend, kind of like an mRNA looking thing. And this is the silver miner stocks are really unrelated to the silver price and sort of silver fundamentals. It's just like when silver is really doing well, the silver mining companies also do well, but that doesn't mean that their stock value is like worth triple or something. It just means they're less likely to go out of business, which is fine, but they weren't in trouble anyway. So it's pretty unrelated to the actual stock, as like the fundamentals are obviously unrelated, as we've seen the whole year, until companies get into bankruptcy trouble and start disappearing and their stocks go to zero. Then people are like, oh, now fundamentals matter because my stocks can actually disappear rather than just like trading them randomly on whatever sounds good. Anyway, this is a really interesting one. It looks like it's finding support. I would expect another move up, but I still feel like this is kind of I don't trust it. I don't trust it. I think this is a 2-day, like a 2-hop news blast is what this looks like, and not a real thing. But probably would land above, well, above that support, and then maybe above this takeoff point too. If it took off again, it might come and land somewhere in here, and then who knows. Anyway, I was excited about the silver stuff yesterday, and then I read all the stuff in the Wall Street Bets. Like, no, that's not nothing to do with us. We're not doing that. So now I'm like, okay, this is I don't like it. But I did buy physical silver, and I don't think that's a bad move to just buy some physical silver. But just trading that silver chart is a little sketch. What's this? The Dow? Who cares? Oil? Haven't looked at it in a long time. It's just whatever. Oil's been on a pretty steady incline, and this is the USO, so it's not really the oil prices. It's like the ETF that is pretty bad to go, long on, because you just eat all of the compounding on the leveraged, contracts. But if oil ever gets in a spot to short, like this is it's a great thing to short, but I don't really see that happening, and it's not particularly related to the market overall. The VIX is a big deal right now because let me go out to like well, this is good to see anyway. The last couple of movements, we got a breakout, and then we got a higher bottom, a higher peak, a higher bottom. Like this is an uptrend in the VIX, and we also had an uptrend prior to the peak. Like it was the VIX was increasing before the market started pulling down, which is not good. And then now we've got a sort of a breakout pattern on the VIX. Although we've had sort of breakout looking patterns on the VIX before, and they didn't hold and just came right back down. So this is not pretty though. Like this VIX shape combined with the momentum looks like we're gonna have a little more follow through on the down move, and then have to kind of see where we're at on the overall market. And then the the VVIX. Does this thing even exist anymore? Should just get rid of this one. Like they're gonna delist this thing, but the vol is the rate of volatility is increasing, which can sort of lead the VIX up. This has gone up as well, but it sort of spiked and came down. Yeah. That one is, what is this? Oh, Russell volatility popped up a little bit. The Russell is pulling down. It's not surprising. Oil volatility up a tiny bit. Nothing. The put call ratio is a big deal. This is another big one. Here, let's get in here because right around the peak of this pullback, we had the most epic bullish sentiment and put call ratio. Absolutely everyone was long. This is, well, I mean, 0.2, whatever, but this is the most puts versus calls that we've freaking ever had, like ever, on volume and on the ratio. And so, like, if this turns out to be a longer term top, like, you can come back and be like, oh yeah, this was a super, long put call ratio. But I mean, we had extreme measurements a bunch of times, like before here, that weren't a long term top, but and it could continue if if this reverses up and just keeps getting more bullish and goes up into like a vertical bullish bubble thing. Like, this probably will go even more extreme, but yeah. Anyways, extreme readings quite often lead to a pullback or sometimes a big pullback. Like when you see stuff going crazy orange, that means it's like a real big pullback on the put call. And yeah, and it doesn't have to go orange; it just has to go up here. But like, this was an epic put ratio at the bottom of the 2020 crash here, and then now we've gone back to like epic call. So could be a topping pattern. Doesn't really give everything away. This is the Treasury bond spread, which is still driving down, maybe kind of maybe bottoming. I don't know, but this the Treasury bond spread tells you that the economy and sort of banking sector should be making less money. Like, the banks make money on the spread, so it's like it's a pretty good indicator for like what to expect sort of from interest rates. Like, this coming down means that it's weaker, the interest rates are weaker, and the Fed funds rate might get set lower. And when they drop the Fed funds rate, it's generally bad for the markets. But yeah, but they're at zero. Like, the Fed's at zero, and they don't want to. Well, they climbed up a little bit actually recently, but it's close, very close to zero. And they don't want to go negative with it. But this is still pushing down on them. So I don't really trust the increase in interest rates that's happening now, just based on the Treasury trading. So the Treasury bonds always lead what the interest rates are going to be. Tesla. Yeah, Tesla. This was the first like Tesla bubble here. It looks so ridiculously tiny now. But Tesla went on a double bubble, and that's kind of what IWM looked like as well, but more recently. But yeah, like, it's this crazy bull market line that runs into an even steeper line, and now we've broken down under there. And that'd have to be a hell of a move to get back up on top of this line after breaking down like that. Let's get in closer on it and see if there's like back testing action or what's going on under here. The line's off. That's not helpful. So, I mean, kinda. Like, it got under there and kind of wiggled a little bit, but it hasn't like dropped and come back up and back test it for like a real negative follow through. So it's broken down, but it hasn't like aggressively like shown that it's going to rip down yet. But yeah, Tesla looks pretty scary. Coming down off of a double bubble can have some downside if it starts to sell off. It has a lot of room to fall. What's this? The inverse exchange traded. Yeah. Equal weight. Just like slightly breaking down. So this is tries to get like a more balanced view of the whole market instead of like skewing everything towards the top 5 stocks. So you get a lower kind of bull line here that's semi-useful and hasn't really broken down. So not really giving away any secrets on that one. I think that's all the indicators I wanted to look at. I don't know. Oh yeah, the currencies are trading. Yeah, so the dollar to the yen just shot up and it's like attacking this moving average. That'll be interesting to see which way it goes. But like this up move here, like will often lead a down move in the market, and it seems to have done that here. And you can sort of watch that maybe to see. It can lead the general. Can like the DXY is like the dollar mostly against the euro, but it's like a whole basket of currencies. But the dollar against the yen sometimes leads the moves that'll be in the dollar, and the S&P is sort of a earlier indicator. Like the DXY is accurate, like more accurate. It really kind of moves inverse to the market a lot, but it doesn't really lead the market, so it's not particularly helpful. And then anything else on the S&P? I don't know. Yeah, we're getting pre-market activity. So it's like really softly touch the top of this line. I would expect it to come down here and like really fight the line. If it's gonna hold support, like and the market is gonna hold and crash up, like I think if this holds support here and it stays above this volatility zone, like this is a huge thing. Like being up in this territory is like serious bubble territory. Like up outside of that whole volatility zone, like it can take off like parabolic up if it stays up here. So yeah, the tomorrow early trading and the whole tomorrow market is going to sort of paint a picture of whether we are holding above the crazy volatility zone and going into a freaking parabolic bubble looking thing, or if we are going to get, if it gets under here and kind of back tests and stays down, then you'll probably get a little more downward follow through. And then we got all these different support levels, you know, relative to the previous peaks. We got the moving averages, just these zones back here that had a bunch of activity that you kind of have to get through on the way down. If it starts making bearish moves and picks up some momentum, there's a lot of stuff to get through. But yeah, anyway, that's the look at the market. It does look super dangerous, but if it holds here, then it's going to be a super bullish thing, especially like if this holds and you get a bearish, a bullish momentum, like if it holds on the daily candles, just on the S&P, probably tomorrow we'll see what happens with the momentum, because this is really aggressive bearish momentum right now. It's like a wide spread that's widening and it's headed down, but we're still up here on the bull side. So it's not going bearish yet. It's just headed bearish. It's just like it's not bearish momentum. It's just trending towards bearish momentum. It's still on the bull side of the zero line. But yeah, so that's basically the real thing to check on the S&P. If we hold here on the bullish side of the momentum line and get a bullish momentum bounce, and we hold up here on this volatility zone, then I'm looking at a super bullish kind of like bubble. Who knows, like friggin', like .com bubble or something, like just like a run up to like some crazy blow off top or something is what I would expect if this reverses. And then if it breaks down, then it gets complicated. So tomorrow should be super interesting. Yeah, that's the market outlook. and the game squeezy squoze, whatever, Wall Street Bets stuff is just the GameStop squeeze. That's what everyone in the Wall Street Bets is saying. Like, forget everything else. Like, GameStop's the only squeeze. It's still happening. And that's what's making the market scary. Like, not only do they have to liquidate positions, but it's like threatening the like integrity of the entire stock market and like revealing possible fraud and all kinds of stuff. So very interesting. That's what's up. Please hit the like button. The I don't know. Go check my playlists out. I mean, that's just a general S&P thing, so there's nothing special here. But I do have like silver playlists and uh, whatever, like hot stocks and monetary education, general stuff about the whole monetary system and the stock market and like fundamentals and then how they actually work. So yeah, this is I think that'll do it. Yeah, cheers and happy trading.